This breakout trade long example is in the Russell market. I'm showing you the full screen so you can see exactly how the indicators looked when this trade set up. And then I'll rewind and advance the chart one price bar at a time so you see the identical picture of what the live market looked like leading up to this trade. So the first thing we'll do is look at our step-by-step rules and make sure we have our indicators lined up correctly to enter this breakout trade. Follow my mouse, the white arrow, as I go over each step pointing to the corresponding indicator. This trade requires just two indicators in the price bars. They are the current high and low lines right here. Here's the high line, here's the low line, and the level of the Pro 9 direction histogram. I'm going to start out showing all of the Pro 9 indicators and then take off the ones in the top third of the chart one by one, keeping only the green dashed line showing the current high of the day and the red dashed line showing the current low of the day, along with the price bars, so the examples will be very easy to spot. First, I'll remove the Pro 9 turn bars. Now, the Pro 9 dynamic price indicator. Now, the Pro 9 action signal. And lastly, the Pro 9 multi-EMA color, which is our set of exponential moving averages. So now we have a stripped down version of the top third of our charts showing where we have our focus, the current high and low of the day, and the current price. The rules for this trade are very simple. When the market is moving toward either the current high or low lines, we are looking to enter the trade one tick above or below these lines, provided we have our Pro 9 direction histogram outside of its 50 lines, right here. Now I'm going to take a minute right here and color these cyan so they really stand out. Normally, the 50 lines are light gray on our charts. However, for the purpose of this lesson, I want them to really stand out. Now again, the histogram must be outside of this range. In other words, above plus 50 for a long and below minus 50 for a short. We'll have a look at both a long and a short example of the breakout trade in just a minute. Step one is to determine our entry price, what that will be based on the current high or low lines. It's important to note that we use the current high and low from the overnight market. However, we only take breakout trades during market hours. Step 2. The Pro 9 direction histogram is outside the 50 lines, which is viewed as the breakout neutral zone. Step 3. Enter the trade in our dome and wait for the breakout to occur. Step 4, which is a conservative entry, is to take the trade up to a maximum of 10 price bars in the direction of the trade. In other words, counting back from the entry bar, there cannot be more than 10 bars to the most recent turn bar. We'll begin with this long example, so I'll rewind and advance the chart one price bar at a time so you see the identical picture of what the live market looked like leading up to this trade. So now we see the price bars and the current high-low of the day. We've got the high up here and the low down here. So we are watching for a breakout to occur. By clicking the wheel on our mouse to bring up the display box, we know that the current high is 88.5. So we are interested in entering our trade at one tick above that line, which is 88.6, provided we have the Pro 9 direction histogram outside of this 50 range, which we do. So we now enter our price of 1088.6 into our dome and wait to see if the market trades to that level. And as we advance the bar, we're getting close, and there we just breached it. So we are now long at 88.6, 1088.6 in the Russell, and we are looking for a profit of anywhere from 5 to 10 ticks. And I'm going to explain that in just a minute. I just want to advance the chart one bar at a time to show you how this breakout trade developed. And you can see we would be stopped out on this bar if you were trailing this trade. A lot of times, again, I'm going to explain this in just a minute, but a lot of people choose to trade this method with an all-in, all-out as opposed to trailing. Okay, So that's it. That is exactly how simple this trade is. And we need to see our Pro 9 direction outside of its 50s. I advanced this because I was watching the direction here, and you could see as the price was heading back up to the new high of the day right here, which is now 1090, we have our histogram just breaching the plus 50 line, and we might have another opportunity to take a breakout long. So as we advance the chart, we do. As I said before, the high was 1090.0, so we know our entry price is 1090.1, and that occurred on this bar right here. So as we advance, you can see what happens as the price just continues to rise. Okay, now I'm going to show you a short example. Okay, here is our short example of the Pro 9 breakout trade, and the rules are just reversed. We are looking for the price to tick down to the current low of the day, which you can see is right here at 1056. Step 2, we look at our histogram. We make sure that it's outside of its neutral zone, this plus 50 and minus 50, and clearly it is. So we have an opportunity to enter this trade one tick below this line. I'm going to rewind the charts right now and advance them one price bar at a time again, so you see the identical picture of what the live market looked like leading up to this trade. Okay, and here we have rewound the chart to show you, and you can see that the price is heading south towards our current low of the day. And with a quick glance to the middle panel, we see that our histogram is outside of its neutral zone, below minus 50. So we know all we have to do is check the price of this line, which is 1056, and enter our order into our dome one tick below that, or 1055.9, and wait to see if the market trades to our entry price. So I will advance the chart, and you can see that we breached it right here, and we are filled in this breakout short. And I'm just advancing the chart one bar at a time, and if you were trailing, there's an opportunity, well, there's a chance that you would have been stopped out right here. So those are both examples. This is a very, very simple trade to spot because we're literally only looking at the current price in relation to the current high or low of the day and the Pro 9 direction histogram. Is it outside of its neutral zone? That's it. That's one of the easiest trades to spot, and it's an incredible dependability, success rate. What I'm going to do very quickly is bring back all of the indicators to show you what the chart looks like when you're watching this live. Okay, here we go. Just wanted to show you that with all of the indicators on the chart, this is still a very simple trade to spot. Here's our current low, here's our current high. Histogram hasn't changed a bit. The only thing I did was I removed the heavy cyan lines showing the plus 50 and minus 50. But that's it. Very simple trade. As always with discretionary trading, the trader is the one that ultimately determines their risk tolerance or comfort level when it comes to profit targets and stops. So the following examples are just suggestions. Profit targets on the breakout trade are typically from 5 to 10 ticks on the first contract, and then a trailing stop approach can be initiated. Or this can simply be an all-in, all-out trade where you exit the trade with both contracts at a predetermined target. If you are going to trail this approach, I would suggest moving your stop loss to break even or break even plus a tick once your first profit target is reached. Recent statistics show us that there is a better than 90% chance of these breakout trades reaching 6 ticks in our favor, with 8 ticks and up dropping below the 80% chance. Our initial stops are from 10 to 15 ticks, and with most cases, a 10-tick stop has shown to be wide enough to allow us to hit our 6+ tick profit target over 90% of the time. Now, statistics do and will change, so these are to be used as suggestions only. I strongly suggest you find what's comfortable for you. To sum this up, lately, 90% of the time, if the market moves against the trade by 10 ticks, it will likely go on to hit the 15-tick mark. Currently, we use this approach in several of our go-to markets like the Russell, the S&P Midcap 400, crude oil, and we also use it in the ES or the S&P 500 E-mini. This is a very simple approach that's easy to trade, and I know you will enjoy looking out for these every single day. Talk with you soon.